Hi guys, I have found one very good opportunity which you can consider for investing, but before March 2024. Why suddenly before March 2024? There are some reasons behind it which I will explain you as we progress through this video. So if you are someone who is looking for investing opportunity and to have a good capital appreciation over a period of next 2 to 3 years, then this video is explicitly for you. Let us start with this video. And before that, if you want to receive more such investing ideas and want to learn about investing in a very practical way, then consider subscribing this channel. Let us start with the video. The stocks that I have picked up is from a real estate sector. The question is, why suddenly have I considered real estate sector over here? The answer to this question stays in this data. These are some real estate industry insights. I have gone through its details. To make it easy for us, I will highlight some specific and key points that we need to consider. The first point from this data over here is, it is talking about the market size of the real estate sector in India's economy as a whole. So currently, as per the market size, it is somewhere around 12,000 crore, which is expected to grow to 65,000 crore in next 12 to 15 years of time period. That means it is a 5x growth possible in this sector. One very good hidden information in this insight is, if we see by 2025, India's GDP will comprise 13% driven by real estate sector. This is very important data for us. I will explain you the importance of this data by the end of this video. As we proceed further to gather some more information, here is where we see that currently in 2025, the $650 billion of industry will move to $1,000 billion. This is almost 50% growth in next 5 years. Further, we see some additional pieces of information. To make it easy, I will again highlight some key things over here. First is, if you see from a demand perspective, it is saying that the luxury segment business, the luxury segment residential market has seen a 151% increase in last year. Now understand that luxury segment residential market in real estate business is such that it always increases over a period of time, and the demand of that also increases exponentially. Why? Because we as a poor middle class people, when they migrate from poor category to middle class to upper middle class to above that and rich category and all of those things, our income level increases. Likewise, our expenses also increases, and we tend to opt for more of luxury items and luxury residential segment houses. These are the reasons why luxury segment houses are always increasing. Moreover, the second data over here from opportunity, and if we see Blackstone, which is like a private market investor who already has an investment of 3.8 lakh crore in the Indian real estate market, they are expected to add additional 1.7 lakh crore by 2030. That means in next 5 to 6 years period, they will increase their current investment size by additional 50%. That shows the trust this big fund house, this mega fund house investors have on Indian economy and on real estate sector. Moreover, if you look at this third information over here, where government has allowed an FDI, a foreign investment of directly up to 100% on townships and settlement development projects. Further, if we see on the growing end, India FDI investment is also increasing year on year. So let us see some more details to get us some confidence on the real estate market. This is bunch of information. Again, to make it easy, these are some key points which are again highlighted, talking about the same thing, that the private market investor Blackstone is expected to invest additional 50% in next 5 to 6 years period. The Indian market for real estate business, the sector alone will be worth 1 trillion in next 5 years. So this is a big move which is happening and is expected to happen in next 6 years. That is the reason why I have selected some stocks from the real estate business. Again, there are many stocks, but we will select few handful and fundamentally strong stocks. And to augment our decision further on selecting real estate stocks, let us even do a small quick technical analysis. For that, we will consider Nifty Real Estate Index. So as you can see here, this is how the real estate index chart looks. Well, this is a weekly data. I don't want to consider daily or a weekly data over here, because real estate is one such sector which is very illiquid in nature. You don't frequently buy and sell any house. That's why the trades are not so frequent. If you buy, you will definitely hold it for 1 month, 1 year, 2 year, or maybe 10 years. That's why I will consider a monthly data in order to interpret this chart. As you can see, with applying a small basic concept of resistance and support, it is almost after 2009 period till year. That means in a range of approximately 15 years, 14 to 15 years, real estate market has been picked up in this period. This is a small support zone which was formed twice, which was rejected twice, 3 times, which is again respected 2 times. So technically, as you can see, the technical chart tells us that the real estate index, the real estate stocks are picking up. Why it is picking up? It is picking up because the companies, underlying companies, have started giving good result. Why it is giving good result? Because people are trading in actual property and real estates. They are buying properties. That's where these real estate stocks are making money, and that's why we see such indices growing up. So this is the second proof to us that real estate sector is definitely making a move this time. And then here comes the most important and the interesting question. What are those stocks through which we can be a part of this growing opportunity and how we can grab this opportunity? So for that, let us apply some key critical filters for real estate stocks, because we want to invest only in fundamentally strong stocks. So I've already applied these filters for you, as you can see here on the screen. I will explain you these filters. So the first filter that I have applied is I have considered only real estate stocks into consideration. Second is I have considered a market cap of minimum 1000 crore, because I don't want to invest in penny stock. This sector is already debt driven sector. That's why I don't want to take risk with penny stocks. Thirdly, I have applied a return on equity of minimum 12%. Understand how I have applied this 12% and why I have applied this 12% over here. So for a business owner, there are only 2 options with him. Either he can invest that money in either some index fund or a mutual fund where he can get 13%, or he can invest his money into business. If he invests his own money into business, very certainly he would expect minimum 12% return. Otherwise, there is no motivation left out with him to operate that business. That's why I have considered that return on equity is always and minimum of 12% over here. Then return on capital employed, here I have considered 10%. Understand the reason behind that as well, because capital employed is a combination of debt plus the owner's equity. So when we talk only about debt, there is a loan, there is an interest component to it. So minimum 10% is what is expected, because they have to give back this debt as a part of their loan repayment to the bank. And this has to be paid over a period of time. So it is fine enough for the company to have a return on capital employed for 10% at least. Then what I have considered another key factor mainly for real estate business is current ratio. I will explain you about the importance of this current ratio over here. This current ratio I have considered to be positive, because what current ratio means, let us understand the definition of current ratio. So in next 12 months, every company has certain assets in their business and they also have a liability to pay off. So when we divide these assets by liability, the formula of that derives to be as current ratio. That means if, say as an example, Keystone Realtor is having an assets of 100 crore, whereas it is having a liability of say 150 crore. So this comes to be less than 1. That means it cannot pay back their liability in very difficult and uncertain times. That's why I've considered that current ratio should be necessarily more than 0, preferably to be having more than 1, because we are in a favorable state. If any difficult time comes, the company can pay back this debt, this liability which they have through this asset over here. As a result of applying this filter, these are those 5 stocks that comes to us as a result. Now let us go ahead and select some important stocks out of these 5 stocks. We don't have to invest in all of them. But yes, these 5s are the one which are fitting in our criteria. So let us go ahead and understand each of them. So this depicts the market capitalization. From return on capital employed perspective, Nirlon is the one which qualifies for it, but that is fair enough. Then on return on equity basis, again Nirlon is coming over here. Return on asset, this is also an important filter which I have considered. Not so important, better more than current ratio, but an equally important. Why? Because in real estate business, the inventories, the properties, the units which are unsold, so that is considered as an asset by the business. So we have to consider the return that it has got considering all the assets that it is currently having. So likewise, if we see from return on asset, Nesco ranks top. PE ratio for real estate companies are always on a lower side. Why? Because of heavy debt that they carry. So even if you look at their debt to equity ratio, so you will always get PE ratio more or less to be of the same one for all the companies, provided they are in a profitable state. So PE ratio does not become and does not tell us whether the stock is undervalued or overvalued, mainly for real estate stocks. Then we have to consider a debt to equity ratio over here. Why PE ratio is low for such stocks? The answer stays in this debt to equity ratio. So if you see for Oberoi Realty, the debt to equity ratio is 32. That means if an investor, if the owner of the company has invested 1 crore into its own business operation, the company has a debt of 32 crore, which is very high and which is a very risky state. By that way, if we see Nirlon and Keystone, even if they are having a higher return on equity, return on capital employed, we don't want to include, or rather we want to exclude Nirlon and Keystone from our list. So these two stocks are gone. So we have only top 3 stocks now to consider. I have again considered one more point over here as a 5-year CAGR return. Why I have considered 5 year? Because 3 years back we have seen COVID. So that's why I want to eliminate the COVID effect and give a uniformity to all these different stocks and consider it accordingly. So in a 5-year basis, Oberoi Realty and Prestige are well performing stock. Now if I have to compare again Oberoi Realty and Prestige over here from current ratio, which is an important ratio for us, because in a short term area, in a short term end, in next 12 months, company should be in a risk-free position. It will be in a risk-free position only when it can pay back its liability, which it can easily pay through its existing current assets. So if we see from current ratio perspective and applying all these different filters, so clearly over here, Oberoi Realty comes first and a safest stock after considering current ratio. Why? Because we want to invest in those stocks which are safe at least in next 12 months. So Oberoi Realty over here having a ratio of 3.79. That means it can pay back its liability at least in the mid-term and near term, unlike other stocks. In addition to this, when I went through the conference calls of Oberoi Realty, the owner has himself mentioned that they have undergone an MOU in order to acquire a land parcel of 6.4 acre in the region of Thane. So if you are from Mumbai and you know this region Thane, then there are people who are migrating extensively to that region. This land parcel will be ultimately converted to residential apartments and which will be sold out in the future. So if you want to participate in that, into that journey of Oberoi Realty being a growing company, you can consider investing in this Oberoi Realty stock. And again, this is not an investment ideas. Disclaimer, please do your own research before investing into it. Now here comes the most important question. Why before March 2024? We know that March 2024, from this period onward, there will be elections lined up. I highlighted one point in the very beginning of the video that real estate sector contributes almost 13% to today's India's GDP. Now, if we talk about 3 important sectors in India's GDP, it is agriculture sector, IT services, capital goods. The 4th emerging sector as of now is real estate sector. Keep this small rule in mind. Governments always love those sectors which contributes highest to GDP. Why? Because it generates huge employment, it generates tax, it helps them run economy in an efficient way. So real estate is such sector which is contributing to the GDP at a higher rate and which will grow with period of time. Government will ease out many norms which is expected. Government will make the businessman's life very easy when it comes to all the rules and regulations which are over there, which will help them construct more and which will also help them sell more. In addition to this, for real estate stocks, the credit rating also matters. So as you can see, Oberoi Realty has got a credit rating of AA+, which means the credit rating agencies have claimed that Oberoi Realty is a safe and a stable company to whom banks can easily lend their money. That also depicts the strength that Oberoi Realty carries with it. This is the reason why I have recommending this stock well before March 2024, which you can consider, again with a disclaimer. If you have liked this content and want to receive more such investing ideas, then consider subscribing this channel. Moreover, if you are interested to know how economic cycle works, then watch this video over here. And if you have to understand how sectors in this different economic cycle works, then watch out this video over here. Until then, signing off. See you. This is Ajinkya.